It was a big week for retail earnings and consumer data. Here's a look at what happened in the world of the consumer this week.
Consumer confidence decreasing for the second month in a row in February. The index falling to a 3-month low on worries over a possible recession.
A decline entirely driven by expectations for the future. That means U.S. consumers keep feeling better about today and worse about tomorrow. We've got to talk about retailers, too. They're remaining cautious as inflation weighs on consumers.
We're just seeing a consumer that's making choices as they've seen the persistent inflation in a category like food and beverage, and that's taking a bigger piece of their share of wallet, and that's factoring into their purchase decisions.
I was at Costco this weekend, and let me tell you, those lines were incredible. As the consumer continues to gravitate and stick to those where value is everything for the consumer right now, they're looking for any way to save a penny.
Disinflation, like the Fed is out there talking about, is not necessarily happening. These companies are still dealing with high levels of inflation in their supply chain, and their customer base still dealing with high levels of inflation.
It's also a very bad macroeconomic situation right now where the consumers have shifted their spending. They're moving away from discretionary and sticking to staples. As a result, it's not the best scenario for the department stores in 2023.
I think the premium, the wealthier consumers are still doing well, and they're still pricing up, so to speak. Whereas the middle income and lower income consumers are not only scaling back some of their purchasing, but some of the features, some of the add-ons, some of the more premium components of leisure spend are beginning to tail off.
All right, well, the economic outlook might be cloudy, but the consumer is still buying. This news cheering on retailers that are capitalizing on some of the strong consumer spending that we are seeing here in the market. Joining us now to talk about those trends, we want to bring in Sucharita Kodali at Forrester Research Retail Analyst. Sucharita, great to have you again. So we heard from a slew of retailers out this week. We had Target, we had Costco, we had Macy's, Nordstrom, just to name a few. What was your overarching maybe theme that you are taking so far from this earnings season when it comes to the retailers?
Yeah, well, anybody selling grocery, anyone selling staples typically did okay. You're continuing to see relatively high single-digit growth for companies like Kroger and Costco, which is incredible because these are mature companies and the consumer is clearly continuing to spend there. It's in line with inflation, so there are a lot of effects that are going in opposite directions when you dig deeper. There's a lot of expenditure on private label goods. A lot of the brand name goods that did very, very well during the pandemic are not seeing the gains that they saw over the last few years. So many consumers are trading down from those brand name goods to those private labels. And what you're seeing is just the same number of units essentially being purchased, but going off into private label, not to some of those traditional CPGs that saw great gains in 2020 and 2021.
Do the private label increases extend into apparel and other categories of retail? And why so have they been so successful in the last few quarters?
Yeah, well, I would say that apparel in general has not been doing terribly well. So you'll notice that I didn't say that the department stores were doing quite as well. So you didn't see the strength in Macy's. You didn't see the strength in Nordstrom. And in fact, when you look at Macy's overall numbers, they didn't even comp their 2019 numbers, which really shows more of the overarching trend with department stores, which is that they've been on a downward trajectory, candidly, for the last 20 years. Now, in terms of apparel and apparel private label, apparel private label that does well tends to be at some of those mass merchants. So like Walmart and Target have pretty strong apparel businesses. And certainly consumers are trading to those departments within those mass merchants and going away from some of the higher end mall merchants where the consumer just has no appetite to spend. As we saw in the clips, the discretionary spend is down, particularly for physical goods.
For several months there, we heard about the inventory issue, probably most significantly pronounced at Target. Are we through that inventory in the retail apparel space in particular, or is it still some long road to go there?
The inventory issues were worst in late 2021 and through much of 2022. And then what you saw for Q4 was almost a retrenching and an overcorrection by a lot of merchants where they just didn't even order enough. And so in terms of inventory, driving any type of markdowns or consumption as a result of too much supply, we're not seeing that. And we see it also in overarching census data, which is that half of the issues now with inflation are driven by demand. There is the other half that's been driven by supply, but it's not as much in consumer categories. It's more in other B2B sectors rather than what consumers are buying, like, for instance, apparel or even CPG.
Sucharita, when it does come to some of the department stores, digging into the Macy's numbers, Bloomingdale's, Bluemercury actually did okay. Just what is your read just on the strength of the high-end luxury consumer and their ability here to weather some of the uncertainty that we could likely see over the next couple of quarters?
Yeah. So what's important to remember about like a part of a Macy's revenue, like a Bloomingdale's or Bluemercury, is it's still a minority. It's still small. But that's something that's important about luxury overall, is that it is a minority, very, very small percent of overall spend. Now, that said, is the affluent consumer doing okay? Affluent consumers are very challenged by the market right now. I mean, a significant part of their net worth is tied up in 401ks or their stock portfolio. And essentially their net worth over the last year has declined substantially. So they're not necessarily feeling super flush with cash either. Now, there are other things like, for instance, perhaps some of that net worth being tied up in home values or other parts of their portfolio, which have increased, but it's not a categorical positive lift in overall value for that consumer versus what we saw in like 2020 and 2021. So net. I mean, certainly some consumers may be spending, but I don't think that even luxury is immune from a downturn in 2023.
Seana mentions Bluemercury. We heard Target CEO Brian Cornell talk about cosmetics and how they really outperformed most at Target. Next week, we'll hear from Ulta, who's up 10% this year and 40% in the last 12 months. Is the makeup cosmetics category now non-discretionary? Is that one of the consequences of COVID?
Well, the makeup category is a beneficiary of something that we call in economics the lipstick effect, which is that it's an affordable luxury for consumers that may not be experiencing, kind of gains in other places. So it's a way to indulge yourself in an affordable way, and it's something that we see happen in almost any type of economic hardship. Is cosmetics tends to do better because the consumer that may not be purchasing discretionary otherwise is choosing to purchase on some of these small price points that may be in the sub $30 range.
Sucharita, we also got the news out this week from Nordstrom closing its Canada business. It's going to affect about 2,500 jobs, so they're cutting costs there. The moves that Nordstrom has made over the last couple of months, and also the talk about the involvement here of Ryan Cohen. How are you reading that, the involvement there is from an analyst perspective, and whether or not you're maybe optimistic about a turnaround plan that we could see here from Nordstrom?
Yeah, and that was an interesting one because the word had been within the industry that the Canada stores were actually doing very well. They were often even, kind of recognized internally as being very, very high performers. The Canadian consumer is known for loving shopping in department stores. And I think in the initial years of those stores actually being open, they did do well. But I think that these were just casualties of the pandemic. A lot of those Nordstrom stores were located in the urban centers in Canada that just saw consumers leave, kind of those central business districts and not go shopping as a result. And it's been very, very difficult to recover from that. Any store that's dependent on tourism or dependent on that worker traffic, that worker in the office environment, they're going to suffer. And I think that's essentially what you saw here. And then you also layer on the fact that they still need to fix their U.S. business and figure out what's going on there. It just made Canada seemingly a management distraction.
All right, good stuff. Forrester Research Retail Analyst Sucharita Kodali. Thanks so much. Dig the glasses, by the way. Much cooler than mine. Very good look. All right, thanks so much.